I think we need to keep this in mind as we move along. I think central banks around the world see the writing on the wall about what's happening financially in the West, and it's no good. And they started accumulating gold, a lot of gold in record amounts from 2022. Well, they were doing it before, but 2022 was the biggest year in net buying by central banks of gold. We expect central bank demand for gold to continue in the coming months.
MarioInnecco 64, led by Mario Innecco, provides insightful financial commentary on precious metals like gold and silver, alongside broader global economic trends. Innecco highlights a significant trend in the gold market, noting that central banks engaged in the most critical net buying of gold in 2022 since the Bretton Woods system was established in the mid-1940s. This substantial increase in gold purchases continued into 2023, with central banks buying over 1,000 tons yearly for 2 consecutive years. Since 2010, central banks have accumulated more than 7,800 tons, with over a quarter of this total acquired in the past 2 years alone. According to the 2022 and 2023 Central Bank Gold Survey, gold's reliable performance during crises and its role as a long-term store of wealth are key factors driving this heightened demand. Innecco observes that gold and silver show resilience in current market conditions. Gold is trading at $2,485, slightly down from its overnight high of $2,497, while silver is at $27.85, having pulled back by 20 cents. Despite these minor declines, both metals remain strong, holding near the $2,500 level. However, gold prices declined during the North American session as traders returned after the Labor Day holiday. Despite data indicating a contraction in U.S. business activity, traders favor the U.S. dollar, leading to a 0.34% drop in gold dollar to $2,490. Similarly, silver prices fell over 1.50% by the end of Tuesday's session, influenced by U.S. economic data showing a slowdown in manufacturing. While this data supports the potential for the Federal Reserve's first interest rate cut in September, the U.S. dollar strengthened significantly due to a gradual cooling in the labor market, with silver dollar now trading at $28.05. Before watching this video, please subscribe to our channel, hit the bell icon for updates, and like it. Also, remember to share it with anyone who might find it beneficial.
Gold and silver held up quite well, and right now gold has come off a little bit here. It's at $24.85. Silver as well has come off a bit, about 20 cents at $27.85. But we are almost back to 2,500 overnight. The high was $24.97. And talking about gold, what I want to cover now is central bank gold buying, because there's been a report that came out yesterday from the World Gold Council, and the World Gold Council is a reputable, I guess, institution. It works with the central banks. Not that I like central banks. I think we need to keep this in mind as we move along. I think central banks around the world see the writing on the wall about what's happening financially in the West, and it's no good. And they started accumulating gold, a lot of gold in record amounts from 2022. Well, they were doing it before, but 2022 was the biggest year in net buying by central banks of gold since the beginning of the Bretton Woods system in the mid-1940s. And 2023 it was pretty close to what happened in 2022. Central bank gold demand strengthened in July despite price rise. Just read a few bullet points here. It says reported net purchase by central banks more than doubled to 37 tons in July. The National Bank of Poland was the leading buyer in the month, followed by the Central Bank of Uzbekistan and the Reserve Bank of India. We expect central bank demand for gold to continue in the coming months. And this is quite interesting what he says here at the end. The gold price rally is very likely having some impact on central bank gold demand this year. The long-standing trend of net buying remains intact. This reinforces the findings from our latest central bank survey, which highlights several reasons, such as gold's role as a store of value and its performance in times of crisis. I know the dollar was kind of backed by gold until 1971, but it wasn't really a pure sound money system. I think we're long in the tooth because early 30s, you got Hoover and FDR. They increased the size of the state. They increased the power of the state. And I think that's all unraveling now because fiat currency, when you have fiat currency, the powers that be always abuse it, and they abuse it by printing and borrowing loads of currency out of thin air into existence. And there comes a point where that can't keep going anymore. And I think a lot of these countries, and most of them are non-Western countries, they're seeing the writing on the wall. And that has everything to do with what's going on with BRICS, which I spoke about yesterday.
Mario Innecco highlights that, despite a recent rebound, the US dollar seems to be weakening again. Key levels to watch are the August 26th low around 1.4350 and the August 5th low near 1.4169, with a potential rapid decline below these levels looming. This weakening trend is supported by a Bloomberg News columnist, who observes that the dollar has fallen about 5% in recent months, reaching its lowest level in over a year compared to other currencies. This decline is attributed to reduced demand, such as how market demand affects the price of goods. Looking ahead to 2024, the expectation is that the dollar will exhibit diverging trends. Initially, the dollar is anticipated to decline on a broad trade-weighted basis. However, despite this general downward trend, the performance of individual currencies relative to the dollar is likely to vary significantly. Let's get back to the video.
As you can see now, the dollar had been rebounding of late, but now it's keeling over again. And I would say the key levels to look here are the low from the 26th of August, which was around, 143.50, and then the lows from the 5th of August, which was 141.69, and that could happen very quickly. And I've seen that the Bank of Japan, the governor of the Bank of Japan, he said yesterday that he reiterated, according to Bloomberg, that the BOJ will lift rates if outlook realized. So he's been fairly tough. I think when push comes to shove, he won't raise rates if things get really out of hand, not just in Japan, but also throughout the world. Someone at the BIS is going to have a word with him. And talking about the stock market as well, today the Nikkei dropped 4.35% or 1,700 points. So we need to keep an eye on that. Right now, the markets, as I speak here, it's 8 a.m. London time. The Dow future is down 0.5% almost. It's down 160 points. The Nasdaq is down almost another percent or 160 points. And the S&P is down 0.2% or another 32 points. The dollar, well, that's down about 0.33% at 144.90. So it's actually near the low of the day. So you'll be watching this video and the prices might be completely different. But keep in mind, keep an eye on the dollar yen. And the lower that exchange rate goes, the more trouble there could be ahead for the financial markets. I noticed yesterday as well, the bond markets rallied in the U.S. Treasuries. The yield curve is still inverted by about 4 basis points. I think the markets are worried about liquidity, about the yen carry trade. The VIX index as well is starting to pick up again. Where is the VIX index? Well, it jumped yesterday from around 16 to 20. It's still well below where we went on August 5th. We went to above 35. Keep an eye on the volatility index. That will, the higher that goes, it means the more fear people have, the less liquidity in the markets.
Given the current gold price, which remains steady near significant levels, predictions suggest that gold will continue to be an asset for investors seeking stability. If global economic conditions worsen or geopolitical tensions escalate, gold could see further increases in value as a safe haven investment. Conversely, gold prices might face downward pressure if the U.S. Federal Reserve raises interest rates or economic conditions improve significantly. How do you think the current market conditions will impact gold prices in the coming months? Drop your comments or questions below. We'd love to hear your thoughts. If you enjoy this analysis and want to stay updated on the latest financial trends, hit the subscribe button and ring the bell for notifications. Thanks for tuning in. See you in the following video and have a great day.